Hi guys, it's your guy here, the unknown trader. Okay, so today let's look at something very important. We are gonna compare fundamentals and technical analysis. Okay, which one is better? Which one is better? Which one is better? Because there is an ongoing battle. These guys believe that these guys are always wrong. These guys believe that these guys are always wrong. These guys believe that fundamentals are the best, and these guys believe that technicals are the best. Which one is better? Which one is better? Which one is better? Which one should you follow? Okay, and I'm just doing this to clarify, because I've realized that there's a huge misconception and a huge battle going on in between the two, which usually leaves beginners frustrated. Okay, what I'm trying to say is, you find that somebody has been studying fundamentals for about 6 months and they are ready to face the markets now, but just when they want to begin, somebody comes and say, nah, you're gonna lose a lot, focus on fundamentals. Okay, now these guys are left like frustrated. They just gonna leave everything they're doing and go to study fundamentals. That will take them another maybe 6 months or a year. Okay, when they come back, like, there's just a lot of confusion. Okay, the same happens to the fundamental guys. Someone is ready to face the markets, and somebody will come and say, you didn't study technicals, you're gonna lose a lot. So these ones are gonna be left confused, and they will have to go and dive deeper into technicals. Okay, so today we're gonna be addressing that challenge, because honestly it is a challenge. Okay, most especially for beginners. So which one is better and which one should you follow? Okay, which one is better, which one should you follow? You can write in the comment section. Okay, so without any further ado, let's jump into it. Okay guys, first of all, technical guys do trade fundamentals, and I'll show you how. And these ones also trade fundamental, because they are fundamental guys. And what is fundamentals? These are economic news that really, or that mostly move the market. Okay, say for instance, people who focus on fundamentals, they are usually long term traders. Okay, they open their positions for weeks, months, or years. Okay, yes, there are people who are comfortable or holding for a week, holding for, weeks, months, and years. Why? Because the market in the long term is moved by fundamentals. And let me just show you what I mean. Okay, but before I explain this, let me come to this one so that you understand this one better after I'm done with this. Okay, on the other hand, we have these guys over here. These are technical guys. Yes, they do trade fundamentals. Okay, they trade fundamentals, but like this is forex factory. If you watch or if you are following my videos, you know what this website is, because it's the website I always talk about. In almost all my videos, I talk about this one. So today I'm not going to go deeper into it. However, if you look here, we have a list of news events that are released on a regular basis, okay, or on a daily basis. Say for instance, on Thursday we are having CPI, okay, and we are having unemployment claims, and also on Friday we are having core PPI, and we are having GDP for Great Britain pound. Okay, we're also having customer sentiment for USD. Okay, so these news usually move the markets when they are released. However, when that impact, when that effect, or when that catalyst they bring is gone, then the markets go back to trading normal. Okay, however, since they are released on a daily basis, if I click more, you'll just see that, okay, we have more and more and more and more and more news. Okay, that will be released daily throughout the month. Okay, when we combine all these news events, okay, and analyze them, then we will get a clear picture, or a bigger picture, that okay, the USD is strengthening, or is it like going down. Okay, so if a combination of this news tell you that okay, the USD strength is strengthening, then what we will expect to see is, we will expect to see the USD going up over a long term. This might be maybe for 3 months, 6 months, a year, or whatsoever. Okay, What this simply means is that, okay, let me try to explain this a little bit further. Okay, if the technique, if the fundamentals, okay, let me come here. I just came to Trading Economics, and I chose this website because it's one of the best in terms of releasing news, economic news. And what I like about it is that it is a free platform. Okay, it's a free platform. We do have other platforms such as Bloomberg and all sort of stuff, which are uh, paid platforms. Okay, they are paid platforms. So these websites will make you understand the news. However, uh, you must uh, you must bear in mind that most of these news outlets, okay, are controlled by the big players. The big players, I mean, are mostly those who move the markets. Okay, they have an impact on those websites. Okay, why am I saying this? Because website like Bloomberg will release the new will actually release news on a daily basis, and most of those news are full of hypes. Okay, are full of hypes, and they will just move your emotion unnecessarily. Okay, that's something you have to bear in mind. These websites are controlled by the big guys. Okay, the big guys. Okay, so just bear that in mind, because if you follow almost everything on this news website, I don't care if it's CNB, what, or if it's Bloomberg or whatever, these websites will mislead you most of the time because they are economists. Okay, and if you know, or if you have been following the market for a long time, you will know that one thing economists do is they will instill fear most of the time. Okay, they will make you or propel you to taking like uninformed decisions. Why? Because they hype everything, and if you follow everything, then you open positions when you are not like really supposed to open them. Okay, so that's why I prefer Trading Economics. Okay, it's taking time to load. I don't know if it's my internet or what, but it's fine. I'll show you everything. Okay, so if a combination of all this news that are released on a daily basis tells you that the USD is strengthening, okay, yes, what we'll expect will be like, okay, fundamentals. Okay, in this case, I'm talking about a combination of all these news. If you are good in analyzing, when you analyze them, if they tell you that, okay, the dollar is increasing, like it's strain it's let me put it like this: the dollar is strengthening. Okay, then it means the dollar will go up in the long term. So yes, we might find that in maybe this is a week. Okay, this is just a week, a week, a week, and a week. This is week 1, this is week 2, this is week 3, and this is week 4. Okay, so you might find that yes, okay, today it's okay, it goes down, the following day it goes down, maybe it goes down for 3 days, it start trapping, and then okay, it comes back and closes. The following week it comes, completes the trap, goes up and goes up and goes up, and then closes. And then the following week it, yes, it goes down and goes down, and then it starts going up. The fourth week, okay, it goes a bit down, retraces a bit, they booking profits, locking profits, and then it goes up. So you can see that it opened here, however on the fourth week it closed here. So overall it is going up. Okay, it's going up. Why? Because the fundamentals are telling you that, okay, the currency is strengthening. However, when we come to what happens within a week, this is not controlled by fundamentals. This is important. Okay, please listen carefully. When we come to what happens within a week, maybe this is day 1, day 2, day 3, day 4, and let me put day 5 somewhere here. 1, 2, 3, 4, 5, 5 days. This is day 1. Okay, this is day 2. Okay, this is day 3. Okay, this is day 4, this is day 5. Okay, so maybe today they will be releasing maybe unemployment data, and then it says, okay, it goes against the USD. Okay, So one thing you should know is that the economy of USA is highly dependent on unemployment data, okay? Because employment is what drives the economy, okay? So say maybe it goes against, then the dollar will drop, okay? And then tomorrow maybe it starts going up day one, and then it closes as a green day. The following day it pulls back and goes up again. This is day two, okay? And then the following day again it pulls back and it goes up. This is day three. So they've gone up for 3 days, and then maybe on Friday they just auction down, okay? So you see, this is what happens within a week, okay? Even though the underlying fundamentals tell you that the currency has to go up, why does it happen like this? Why doesn't it immediately go up? Because a combination of fundamentals is telling you that, okay, the currency has to strengthen. I don't know why it's taking time, but it's fine. I'll deal with it, okay? Let me try to refresh it. I don't know why. Maybe I've opened too many apps, but anyway, it will finish, okay? I just want you to understand this better, okay? So when a combination of news tells you that it has to go up within the week, this market is not going to be controlled by fundamentals. I repeat, it's not going to be controlled by fundamentals. The only thing that's going to influence that market is the news that will be released on that specific day. And besides, the news might just, okay, spike and do whatever it does, and within 10 minutes that effect is gone, the market is gone to normal, or within 30 minutes or within an hour, okay? Sometimes it can take up to an hour, and then it goes back to normal, okay? So what happens is, like I told you, maybe non-farm was released here, okay? Then it took the market down, but the following days they are going the opposite direction. Why does it happen like this? Because in the long term, this is within weeks, okay? In the long term, the market is controlled by what we call fundamentals, okay? Now we are talking about a combination of all these events. When you analyze them, if you are good in analyzing, when you analyze all this news all together, take everything and analyze it, okay? And then it tells you that, okay, the dollar is strengthening. This is what will happen. So within a week itself, what moves the market on the short term? This is a short term, okay? Because it's only days. This is only 5 days. What moves the market in the short term? Maybe during the whole week. What is moving the market? It is moved by these guys. These guys are moving the market makers. These guys are manipulators. They are the ones who are moving the market during the day or in the course of a week, okay? So they have limits, they have rules that actually governs them, because if they don't have rules, they will break the markets, okay? You'll wake up one day and find that the rand, it's trading at 16 1 rand. It's roughly $1.16, okay? And then you'll wake up the next morning and find that $1 is 100 rand. That will happen if these guys do not have laws. Why? Because they are greedy and they just want to make more and more and more. What is the objective of the market? I told you this in one of my videos. The objective of the market is to take capital from many, okay? That's the objective. They are taking capital from many and giving it to few people, okay? Who are those people? Those are the people who control the economies of the world, okay? So they are the ones who decide what happens where and how and when, okay? So the goals of the markets are to take from many and give it to few. Who are the many? Retail guys, okay? Who are the few? Market makers, okay? So you must understand this. So which one is the best between fundamentals and technicals? Now, to answer that, if you understood everything I'm saying here, to answer that, I will say it depends on the kind of trader you are. If you are a short-term guy, then technicals will move your market. That's why we talk about 1, 2, 3. Why do we talk about 3? 1, 2, 3. It's because this is a psychological number that is used to actually trap retail guys, because the markets do three things. One, two, three. They show, okay, they trap, okay, and then they reverse. This happens on the short term, okay. They show, they trap, and they reverse. They take 3 days to move in one direction, unidirectional, okay. They take 3 days to move in one direction. Your indicators try to start to detect the underlying trend that, okay, it's going up and going up. On the third day, they trap, and then they reverse. That's what we have been talking about in all my videos, okay. That's what we have been talking about, and you have seen how it works, how perfect it is, okay. So this is what the market will do in the short term. However, in the long term, the markets will be moved by a combination of news events. I don't know what's happening. I don't know. Let me check. Is it my internet or what? Yes, my internet is connected. Let me see something. I don't know. Yeah, it has to be connected, okay? So let me just try to refresh again. It's fine. Oh yeah, it's connected. Sorry, it was my cable, okay? My internet cable was out, okay. So yeah, they'll actually come up. So what I'm saying is, the markets in the long term, they are moved by fundamentals, by guys like banks, okay. Banks, okay. Sorry for this handwriting, I'm just using my mouse, okay. Banks move the market in the long run. Market makers move the market in the short run. These ones are manipulators. That's why they are always looking after your stops. So if you are a long-term guy and you are trading fundamentals, the only technicals you need to know are the patterns, okay. Patterns. What I'm talking about, it's head and shoulder. It doesn't matter whether it's inversed or whatsoever. It's triple tops, triple bottoms, it's double tops, M and W's. It's Batman, half Batman whatsoever, or double Batman, okay. This is also a form of double tops, but this one is where they stop hand and then immediately they move from that zone of trapping, okay. And the same applies when it's inverted, and normally this will be accompanied by raro tracks. Raro tracks are those big candles that goes up and then immediately an equal candle goes down, okay. The same applies if it's going up, okay. So this is the down candle. Immediately it goes up maybe 20 pips and the following candle goes down 20 pips. They just use this one to trap people above, okay. So these are the patterns. We call them the reversal patterns. If you are a fundamental guy, these are the patterns you have to know, because you need to know when to open your position, okay. However, after opening your position, then you can go and relax, because you are trading the long term. And these guys, what they usually do is they open a position and they just check it maybe every Friday, because they might open position for maybe 6 months and hold that position throughout that 6 months, okay. And these guys are not affected by the market makers, because these guys cannot manipulate past the week, okay. They will manipulate this week, say maybe using this example, the following week, yes, they will do the same. However, they will be slowly auctioning up in the direction of what the fundamentals, because at the end of the month, at the end of the year, at the end of maybe 6 months, weeks, they have to do what the news are saying. They have to align with technicals, okay. So I believe you understand. If this is still a bit complex, you can just tell me. But fundamental guys are long-term guys. They hold for weeks, months, and so ever. And technical guys are short-term guys. They hold for a day. Usually they don't go past the week, okay. Because I also don't go past the week, okay. So our market is moved by market makers and the news that are released on these dates, okay. So I think that's what you have to know. So which one is the best? There is no best method. It all depends on the kind of trader you are. Are you a long-term guy, or are you a short-term guy? If you're a short-term guy, then technicals will move your market. Why? Because there's gonna be a lot of manipulation. There's gonna be a lot of stop hunting. There's gonna be a lot of crazy things happening within the day, or within the week. However, when it goes past that, then that's where fundamentals, a combination of all the events, release the results, because GDP will be released every month, and you can analyze everything combined. What does the non-farm say? What does GDP say? What does CPI say? What does this say? What does this say? When you combine all those news and analyze them, you will get a value, and that will tell you if the currency is strengthening or is weakening, and that's when you can open your position based on that. Okay, and you can just hold. That's when you're a long-term guy. But if you are a short-term guy, you have to learn a lot of things. You have to learn the trapping, the 1 2 3, the disadvantages of indicators, because this guy are gonna unleash their wrath, and they're gonna be violent, and yeah, that's what's gonna happen. But both of these methods have great rewards. Okay, but it also boils down to what is your level of patience. Are you able to hold for a long term, or are you like, you don't want to hold for a long term? Because sometimes it's stressful knowing that, oh, you have an open position, you might wake up the next day to find this or this or this. Okay, because both of these strategies might lead to a loss. Okay, because remember, you might be a fundamental guy, you might be 500 pips up. Okay, pips up in profit. Okay, and then there could be like maybe a cyclone somewhere during the weekend. Maybe say you are holding the USD, and then there is a cyclone or some form of unexpected events that happen, and then just because they're happening on a weekend, the markets are closed, you don't have access to the markets, you can't close your position or whatsoever. And just to find that, okay, during that weekend the dollar is gonna fall and fall and fall. By the time you get access to your charts, you find that, oops, you have lost a lot, and it has gone maybe 450 pips down. Okay, and now you are only left in a profit of 50 pips. So both of these methods can carry great risk. Okay, but again, it all boils to the kind of guy you are and the level of patience you have. But just know that the market for these guys is moved by this cruel guys, and the market for this one is moved by news and by banks usually, because you know that to move the market 1 pip, it usually costs 10,000 lot size. Okay, 10,000 lot sizes to move the market 1 pip, and banks do have a lot of capital, so they can just open any position as long as it aligns with the fundamentals, and you can just come and use trading economics for that. I don't know why mine is not opening, but anyway, I believe I've shown you some of the things. You just go and compare and learn to analyze these data, and you can just take your own decision. However, if you're gonna go the route of listening to the news, trying to follow what economists are saying, then you're gonna experience a lot of losses, because economists are trained to be like, if something small happens, they are gonna hype it in a way that even if you're in profit, you might close your positions, just because they are hyping the situation. Economists are built like that. That's what they've studied. Okay, and in real life, what most companies have found out is that most economists don't bring much profits to the table, because these guys, they hype almost everything, and they don't want to risk. Actually, they don't want to risk anything, and you know that without risk there's no reward. So economists are trained to be against risk. Okay, that's what they are taught all their lives at school and whatsoever. They are taught to be like anti-risk. Okay, they don't want to risk. If you want to open a business, you go to an economist, they will usually tell you about the negative sides of things, what could go wrong. So they might discourage you, That's how they are trained. Okay, that's who they are. So all in all, I think that is that will should paint a picture for you. If you want to go for fundamentals, you can go for fundamentals. Just be good in macroeconomics, be prepared, macroeconomics and microeconomics. Okay, just be good in this. Go and learn. There are many books, actually. There are many courses you can take just to understand these two subjects. Okay, I did a bit of economics at school, so in terms of macroeconomics, I do understand microeconomics, and I don't fully understand macroeconomics, but I understand here and there and here and there. But anyway, I'm a technical guy. I don't care much about this. You can also go, if you are a fundamental guy, you can also look at court reports, where you'll find institutions okay, most companies in the US, or brokers in the US, are forced to release a certain amount of data to the public. For instance, they are forced to release like how many institutions have opened their positions and how many are closing. So you can see, say maybe USD. Okay, with the court you'll be able to see how many institutions are closing maybe their long position on USD and are opening short positions. This should give you a clue that, okay, it seems like the US dollar is preparing for a downfall, hence why big institutions are starting closing long positions and they are now opening what we call short position. However, do note that institutions are too clever. Sometimes they will just close long position. Say maybe the market has been going up, they will start closing long position. Why? Because they are locking in their profits and they still want to buy. So they know that by closing positions, they will bring the market down. Since they move the market, they will bring the market down, and then when the prices are much cheaper, they just preparing to buy again. Just study the market cycle, the business cycle, you'll understand. And then they want to pump the market up once again before selling everything. But this should give you a clue of what is really happening. That's how most of the time we get the double tops in the long term. It's because institutions are closing long positions, and then later when the price drops, they still believe there's more to be made on the upside, and they just start buying again and buying again and buying again. And then when people start buying with them, that's when they will sell and push the market down. So that's what happens. Unfortunately, there are certain advantages that institutions have, and there are certain advantages that retail guys have. But once you know these guys and you know their footsteps, then you will be good to go, because they will throw a lot of tactics, but they can't hide where they've gone. They can't hide what they have done. If they are trapping, you'll always see that, okay, here they've been trapping, now they've broken out and they pull back, now they're ready for a down move or whatsoever. Okay, so yeah, in short, this is my explanation of fundamentals and technicals. Yeah, my screen is messy, but I believe that if you've been following, now you have a better vision of what are fundamentals, what are technicals. I just don't want, like, if you're starting out, you are good in technicals, and then you will just doubt your ability and start trying to figure everything out in terms of fundamentals just because somebody's saying fundamentals are good than technicals. No, it all depends on the kind of guy you are. And remember, technical guys, your market is moved by these guys, and they can only control what happens during the week or within the week. But when it goes beyond that, then they can't manipulate that. Yes, what I'm saying is they will manipulate this week. Next week, they will manipulate this week. However, they will have a goal, okay? They will have goals. Because if fundamentals are saying the currency has to be bullish, they will manipulate. However, they will be going in that direction of the overall fundamentals, because they are lost. That forces them to align and make sure everything goes in order. Okay, so just by knowing that, I think you might have the advantage, and you can have the peace of focusing on what you really want to focus on rather than worrying about I just want to learn this. Now you're gonna end up learning everything, and you're not gonna be executing anything because you'll be doubting your strategies here and there. So all in all, guys, I believe I've cleared the air. And yeah, sorry, my screen is messy. If you still want me to clarify this going further, it's fine, just tell me, I will. Okay, but there is no best method between the two. It all boils to you. Okay, you are the one who knows the kind of guy you want to be. You are the one who knows your risk tolerance, you know your level of knowledge, and actually you know the kind of trader you want to be. So once you have decided, you will know then, are you gonna follow this or are you gonna follow this? So guys, I think this is more than enough, and I thank you.